Do you want to learn how to file your sole proprietorship taxes? Then stick around till the end of today's conversation. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you doing today? I hope you are doing fantastic. I'm doing marvelous if you're to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to give you the full guide to filing your sole proprietorship taxes. But before we get into the nitty gritty here, let's first understand how sole proprietorship are taxed. So sole proprietorships are subject to pass-through taxation, meaning the business owner reports income or losses from their business on their personal tax return, right? But the business itself is not taxed separately. That's why we kind of call it the pass-through. So a sole proprietor will submit a Schedule C with his or her personal 1040 tax return on an annual basis. And the sole proprietor will also be responsible for filing Schedule SE with these returns and paying self-employment taxes on a quarterly basis. So as a small business owner, you have a number of complicated responsibilities on your plate if you really think about it, and perhaps none as complex and as significant as filing your business taxes. So as far as business accounting goes, filing taxes is certainly one of the most time-consuming and involved processes you'll need to complete. One thing I want to say here is that the extent of your tax responsibilities, however, will largely depend on the specifics of your business, including first and foremost, your business entity type. So when it comes to sole proprietorship, there is a variety of taxes you have to think about. So income tax, self-employment tax, employment tax, also known as payroll tax, right? This is a tax you deduct from employee paychecks. You have excise tax, you have sales tax, and you have property tax. Now, what are the basics of sole proprietorship taxation? So before I dive into the details involved with the sole proprietorship taxes, let me just kind of tell you a little bit about the basic information you got to know. In essence, sole proprietorship taxation is different from other business entities like corporations because the business itself is not taxed separately from the business owner, aka the pass-through taxation scheme. Instead, you report and pay your sole proprietorship taxes as part of your personal tax return. And the reason why this happens is because the IRS understands that you don't have a legal existence separate from the business existence. You should remember though that when you take money out of your business to pay your taxes, it will come out as an owner's draw and not as an expense. This is very important, and the IRS has ruled over this distinction several times in the last 30 years. One thing you have to be clear about when it comes to sole proprietorship taxes is that people always ask, are there sole proprietorship taxes for LLCs, limited liability company? It is important to understand that even if your business is an LLC, you may still be filing taxes as a sole proprietor because an LLC is a legal status granted at the state level and not a federal tax status. So single member LLCs are subject to sole proprietorship taxation. So if your LLC has 2 members, for example, you'll be classified as a partnership for tax purposes. However, either single or multi-member LLCs can elect to file their taxes as a corporation by completing Form 8832. And one thing I also want to say here is that you gotta understand that there are a few criteria you have to think about when it comes to determining your income tax liability. How do you do that as a sole proprietor? Now, as a pass-through entity, you'll pay income taxes on your sole proprietorship as part of your personal tax return, right? Using Form 1040 Schedule C. In order to file this return, you will need to determine your sole proprietorship taxable income. And I'm actually showing you right now on the screen. You have the profit and loss from business Schedule C. This is how it looks like in 2020. And the great thing here is that you don't pay taxes on the full amount of your sole proprietorship's income. Instead, you only pay sole proprietorship taxes on the profit of your business. Essentially, this means that you will be taxed on all profits. That means the total income minus expenses, regardless of how much money you withdraw from the business. It is therefore, folks, it is important that to understand that your sole proprietorship's taxable income will be close to the net income or net profit number at the bottom of your profit and loss statement, but with only a few adjustments. So this is kind of important. And one thing I also want to say is that, like any business though, you'll be able to deduct business expenses on your return. However, you want to ensure that you are managing your bookkeeping correctly to report your taxable income and any deductions accurately. Because one thing we've seen in our research is that a lot of sole proprietorships makes this mistake is to record cash activity. I'm talking about owner's draw, cash infusions from loans or investments, payments on long-term debt as expenses or income on their profit and loss statements when these activities do not impact taxable income. Those are cash flow activities. Those are cash inflows and cash outflows. I'll be right back. Right after this, don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. Let's continue quickly here and let's talk about the special deductions that you can claim as a sole proprietorship. First, you have the health insurance deduction. So many sole proprietors don't realize they can claim health insurance premiums for themselves and their families without itemizing their tax returns. So if you are a sole proprietor, your health insurance premiums are an above the line deduction, meaning you can deduct it before you arrive at your adjusted gross income. You want to note though that this only applies to the premium for months when you or your spouse or other family members are not covered by a group insurance plan. You can also deduct as a sole proprietor business mileage. Although the business mileage deduction is not limited to sole proprietorships, sole proprietors often tend to overlook this deduction, thinking it's not significant. However, think about it. If you use your car for business purposes at 57.5 cents per mile in 2020, this deduction can make a sizable impact on your tax liability. So in order to receive this deduction though, you will need to keep thorough mileage records, but there are a lot of apps out there, a lot of business apps out there that can help facilitate this process. You can also deduct home office expenses. So a lot of folks have been saying, a lot of sole proprietors hesitate to claim the home office deduction because they've heard this deduction is a red flag and makes their return more susceptible to audit. But think about this. If you run a home-based business, you are entitled to this deduction, and it can have a significant impact on your tax liability. With this deduction though, you should keep in mind that you can only deduct expenses for the percentage of your home you use for your business. Additionally, your home office space must be used exclusively for business. So if your office is a corner of your kitchen table, for example, you can't take this deduction. What about self-employment tax? This also applies. So when you're an employee, your employer pays 50% of your Social Security and Medicare taxes, and the other 50% is withheld from your paycheck. As a sole proprietor, on the other hand, you are responsible for 100% of these taxes. And these taxes are referred to as self-employment taxes. And currently, the self-employment tax rate is 15.3% of your self-employment income. So this being said, 50% of your self-employment taxes are deductible. All right, so you just have to think about it. Now, let me kind of give you very quickly here other overlooked business tax deductions. You have startup and organizational cost, inventory, utilities, insurance, business property rent, auto expenses, rent and depreciation on equipment and machinery, office supplies, office furniture, software description, advertising and marketing, business entertainment, travel expenses, interest, bad debt, taxes, employee salary, employee benefits program, employee gifts, legal and professional fees. So all of this are seldom, they are usually overlooked, but they are valid deductions that sole proprietors can claim. So now let's talk about the real question here. How do you file your sole proprietorship tax returns? So there are many forms, and you got to note that although I've been talking to you about your business income tax liability, you may be responsible for additional taxes such as payroll, property, sales, and excise taxes. And so you want to think about that. And so if you are liable for Social Security and Medicare taxes and income tax withholding, you got to use Form 941. We actually put this on the screen right now. Use Form 941. And if you are liable, so you use the Form 941 Employer's Quarterly Federal Tax Return. You got to use another Form 943 Employer's Annual Federal Tax Return for agricultural employees, and or 944 Employer's Annual Federal Tax Return. If you are liable for providing information on Social Security and Medicare taxes and income tax withholding, then use Form W-2, so that's wage and tax statement, and W-3, transmittal of wage and tax statements to the Social Security Administration. And all those forms are currently on the screen right now, so you can see how they look like. You can see what they look like. And if you are liable for providing federal unemployment tax, FUTA, then you have to use Form 940, Employer's Annual Federal Unemployment Tax Return. And if you are liable for excise taxes, then you want to search the IRS website for more information on the specific excise tax. And you may need to file Form 720, Quarterly Federal Excise Tax Return, or you may have filed it throughout the year. So this is what the Form 720 looks like. And just FYI, excise taxes are paid when purchases are made on a specific good, such as gas, and they are often included in the price of the products. And there are also excise taxes on activities such as wagering or on highway usage by trucks. So one of the major components of the excise program is motor fuel. And I also want to talk about very quickly about the fact that when we talk about sole proprietorship taxation, you have to think about income and self-employed taxes. You have Schedule C, which is very important. Schedule C is used to report the profit and loss of your business. So you'll also use this form to report your business mileage. So overall, Schedule C, as shown right now on the screen, is a relatively easy form to use and follow because it's broken up into 5 sections asking about your income, expenses, cost of goods sold, information about your vehicle, and other expenses. And you can actually, and you also want to use information on your Schedule SE. That's, as I mentioned earlier, as a sole proprietor, you are responsible for self-employment taxes. So you have to be very careful about how do you complete Schedule SE, because you're going to have to justify certain numbers there. Other taxes that you have to be aware of include employment taxes, property taxes, sales and excise taxes. I already said that. One thing you have to be very careful also when it comes to sole proprietorship taxes is that you need to be careful about the timing. When do you file your sole proprietorship taxes? Because ultimately, the returns for your sole proprietorship taxes will depend on the specific tax. So along these lines, it's important to remember that some tax returns like Form 1040 and the accompanying Schedule C must be filed annually, whereas others like Form 941 for payroll taxes must be filed quarterly. So in order to file your general income taxes for your sole proprietorship, you must complete the required forms on the same schedule as your personal tax returns. In other words, you have to file by April 15 unless you file an extension, which will give you until October 15 to file. However, you also want to keep in mind that the IRS requires you to pay this tax liability throughout the year, meaning you gotta complete Schedule SE to determine your estimated payments and pay the respective amounts on a quarterly basis. Although there are several deadlines to adhere to, you want to be sure to keep track of your tax responsibilities, pay your estimated taxes, and file on time, because guess what? If you don't pay your estimated taxes and wait until you file your annual return, the IRS may charge you a penalty for failure to pay on time. And similarly, you may face a penalty for any IRS business form that you don't file completely by the deadline. So the bottom line here, folks, is that as a sole proprietorship, it's important to keep track of the filing dates, the filing forms, the taxes, the different taxes that you have to abide by, that you have to pay, from self-employment to income taxes. And you have to be careful about the timing in terms of paying taxes on a quarterly basis or annual basis. And one thing I want to say is, if you're not familiar with taxation, you have three options here. You can do it yourself, DIY. If the DIY option is not good for you, then you can actually reach out to a tax accountant. Here I'm talking about a CPA or an enrolled agent, an EA, or even a tax attorney. So someone to help you file those taxes during tax season, but also throughout the year. And the third option here is that you can actually use software. There are various sole proprietorship and self-employed tax software tools out there, from H&R Block to Tax Act to TurboTax, that can help you actually file your taxes and stay on top of your fiscal responsibilities. All right, folks, thank you so much for today's conversation. I hope that this tutorial added value to your life and helped you file now your taxes. I will speak to you another time, but until then, remember, stay marvelous.